Hi, fellow traders. I hope everybody had a great Monday. Hope you enjoyed your weekend. I know I enjoyed mine. I wish I could have weekends like that every weekend, but I guess if I did, I wouldn't appreciate the ones that I get. But came into the morning, you know, kind of expecting what I got last Monday, and it really looked like it was gonna be that way. I didn't see a whole lot on my scan. Everything was moving kind of slow. Didn't really get a whole lot of volume, but we had a couple of good stocks to look at, and turned out to be one of the best days I've ever had. Um, so I'll be sharing that with you here in a minute. But one of the big things, and the things that really helped me lock in and make the trades that I make is based on the law of resonance. And it's one of the principles that I brought over from my former career. And it's really simple. It's basically the transfer of energy from one medium to another. So you look at these tuning forks, and you might have done this back in high school. This is a simple experiment. This is just how simple this law is. You had a lab partner stand next to you holding a tuning fork, and let's say you had tuning fork A. You strike it, it starts to vibrate, and it puts out the tone. Well, your buddy holding the other tuning fork starts to feel his vibrate and emit the same tone that your tuning fork is. And what happens is these two tuning forks become in resonance. They begin to vibrate together. The energy from tuning fork A has been emitted and absorbed by tuning fork B, and now they're in harmony with each other. And this is one of my so-called secrets to success. And I had to think about whether I should introduce it at this point or not, because before you can be in resonance with something, you've got to be right yourself. You got to be right inside. You got to have the right foundation. You got to have the right mentality. Everything in you has to be right before you can start emitting your energy out in hopes of being in resonance with something. So, and it's funny because as a teacher, I resonated well with my students because I was actually in resonance with what I taught. And this is where this principle comes in, that if you're not 100% into what you're doing or believing in practicing what you're doing, it's not going to happen for you. And then other people can see it. My students would tell me all the time, that I was the only teacher they respected because I was real. If I didn't know something, I let them know I didn't know it. If I couldn't do something, I would get somebody that could and that could help them. I was 100% authentic with them. And, they really, appreciated that. Therefore, we had that connection and we were in resonance with each other. And it was a beautiful experience in the classroom. And I don't know if you've heard this story before, but it's about one of the many stories that you hear about Mahatma Gandhi. There was this lady who brought her child to see him, and her child was diabetic and he wouldn't stop eating sugar. And the lady comes and asks him to tell her son to stop eating sugar. And Gandhi, I think he tells her to come back in 3 weeks or 3 months. I can't remember if it's 3 months or 3 weeks. But, you know, it was interesting because she went away for the 3 months, and then came back and went to see her again. And, I mean, went to see Gandhi again. And, you know, this time Gandhi looked at her son and said, "Stop eating sugar." And the son said, "Okay." And then she asked Gandhi, "Why didn't you simply say this 3 months ago?" And Gandhi said, "Madam, 3 months ago, I myself was eating sugar." See, Gandhi understood that being in resonance with what you want from the world means accepting that you only get what you're willing to give. You know, he knew that he would not be authentic, and the boy would probably recognize that he wasn't if he simply had the attitude of do as I say and not as I do. And that was the principle behind my teaching. And that's kind of what I brought into the teaching I do and the mentoring I do here in trading. You know, because as traders, we have to be in resonance with our trading process and our trading strategies, or we won't be consistently profitable. You know, we may make money here or there. We may catch a winning trade. We may piggyback off somebody and copy their trade and get in it. But the problem is we won't be able to handle those winning trades. We won't have a clue how to handle them. And that hurts our ability to be profitable, It hurts our consistency and our ability to be consistently profitable. You know, think about these lottery winners. Like 1 out of every 3 lottery winners who wins this big jackpot ends up broke and penniless. They end up in worse shape than they were when they won the money. You know, and it's not because everybody comes knocking on their door wanting to take their money. It's because they were not prepared to be rich. Their mindset was still about being poor. They didn't understand how to handle and how to manage their newfound wealth. And so they lose it because they're not in resonance with it. And it's like that with us in trading. You know, if we start making a winning trade here and there, if we're not prepared to handle it and we just start ramping up our share size because we won 1 or 2 trades, it won't be long before we lost that money and then some. So we have to be in resonance with what we're doing. You know, we also have to strive to be in resonance with the market. You know, so how do we do that? It's through pure price action. You know, and that's because everything else we use is lagging. All the indicators, all the stuff that we use, that we depend on every day, that I call my training wheels, because eventually I want to take them off and then just trade based on pure price action. That's my goal. But, you know, that's how I get in rhythm with the market. If you're in the community and in the mornings, you hear me talk about that a lot. You know, it's like when I pick a stock to trade, I need to feel its pulse. It's why after 9 o'clock, I don't add anything to my watch list unless it's something that I'm intimately familiar with, that I know the rhythm of the stock. I know how it trades. I know how it feels. You know, and sometimes it's difficult because you do have these big funds, these big institutional traders that can actually move the price of a stock. They have enough size behind them that they can actually move the stock. And, you know, and it's obvious that these clowns don't have any rhythm whatsoever at all. So it makes it a little bit more difficult to figure the moves. But that's part of my study, is to try and understand when these big funds start moving the market, what are they looking to do? And It's just like some of the stocks that we looked at last week. I can't remember the tickers. And I told you, through my research, big money is in this stock. It's on earnings. The stocks that I do research for on earnings. And because of that, watch what happens. And I tell you exactly what the stock's going to do, because I'm kind of in tune with what big money is doing now. Now, obviously, they're going to change their dance. Once too many people figure it out, they stop making a lot of money. So they change their tune. They may play in a different key. You don't know. But it's our job to figure it out. It's our job to become in resonance with this so that we can dance. And, it's a beautiful thing when you get to that point. It just takes time and patience. It is about hard work. I mean, it is about hard work. But just because you work hard and put all the time and effort into it doesn't mean it's going to happen. You can't force it to happen. There are times like this when we get in the market that we have to sit back and allow the market to come to us. Allow the market to serenade us. We get the rhythm. We get in the trade. We execute our strategy, and we start pulling money out of the market. And that's kind of what it's all about. So to me, that's what the law of resonance is, and what it means to me in terms of my trading. And when I'm out of sync, and I'll tell you when I'm out of sync. But I am focused more and more on making sure that I stay in resonance with the market, with the stocks that I'm trading. And I try to, bring that to you in the community in the morning. All right, so let's take a look at what we did last week. 32, 20, 33 was what we ended up with last week. A pretty slow week compared to the previous weeks. And I was accepting it because I know there's going to be a slow period between now and earnings kicking up next month. The day just surprised me. It really blew my mind. On the rest of the week, maybe slow like it was last week. But I was here to take advantage of what the market gave today. And, that's what it was all about. For the month, we're at 13,186.47. And if you were in the community, you see all these trades happen every day. If I'm in a trade at lunch, you'll see it when I get back. Or a lot of times I'm still in it. You'll see it still. You'll see me finish it. So you guys see all of these trades, that I take. And, it's all about just being in tune with the market, understanding what's going on, and when it goes against you, knowing when to get out. That's pretty much what it's all about. So we've got 2 more weeks in this month, and it's going to be back to Sofa City. Back to trading small, taking small sizes. These numbers are going to be a distant memory here before long. But that's okay, because this is where I start. I start making those small gains, and we grow. We start adding size. Our account grows. We start growing our account, and we're starting to take a little bit bigger size. And we get comfortable with that. We take a little bit bigger size. And before you know it, we'll be back at these numbers again. So it's just a matter of, understanding that it's going to take time, and we have to perfect the small before we can blow up big. And that's what it's all about. Okay, OLED was a stock we were looking at today, and it was gapping down. just like we like. Those are the stocks that I love to see day in and day out. Is a stock gapping down. And it was on a different catalyst. I can't exactly remember what it was, but it was a catalyst that's tradable to us. And, we were able to get in. We were able to make this happen. So when we see gap downs like this, I like to see it gap down, get under some resistance, whether it's a moving average or whether it's a pivot or whether it's some descending. Like right here, we can do a descending resistance line here. If it's under that, hey, I love it. I'm ready for it. I'm looking to short it. So this one was good. We had this on watch on Facebook as well. The news on it. And we were gapping down. We were under all the moving averages, but we had the 200 here. So my goal on it, looking at it, was, hey, the 200 will be a magnet for me today. That ought to be ideal. And, so I had Facebook on watch. So the first stock I took, and I took this because I liked the rhythm of this stock better than I did Facebook at the time. I felt this was ready to give me the best move. We sold off pre-market. We kind of bounced, held up here, and we had nice smooth price action selling off going into the open. So here's an opening candle. This candle went back, retested VWAP as this sold off. I got in just under the 5-minute opening range low. I could have got in here, but I wanted to respect this 5-minute opening range low. The other deal was we had the pre-market low here. So this always acts as support sometimes at the open. So I got in, took some off here at the pre-market low. This candle opened and started to sell off. I thought we were going to make my 110 target. This hit 110, but the ask didn't hit 110. The bid hit 110, but if the ask didn't hit 110, my order wasn't going to trigger. It didn't, and ended up getting stopped out at break even. So, being in rhythm with the stock, understanding how these stocks move, I know we get a pullback. If we get the rejection, I'm going to take it back down. So I got short here on the rejection, took some off again at this same level because we were having trouble closing below it. So if anything, I was going to lock in some profit. Got in and then got stopped back out at break even. So I said, okay, if this is the way we want to play this game, the market is choppy, this is all I'm going to get. I'm going to get $100, $150 a hit. Leave that last half on just in case we get the run, but just be ready to take it. So I got in. Then we got the sell-off that I was looking for. Got the move down to 110. Got this off. Took some more off down here around 108. And kind of covered a little bit too early here. I thought we were going to bounce off this. And we actually tried to. But I took some, didn't think we were going to get down through 107.50, but we did by a little bit. But we got the meat of the move. And that was the key. I didn't have to, top ticket or bottom ticket. I got the meat of the move. So we pushed back up. And, what I said in the room was, if we reject here, we can get the move down to this 103.88. But if we hold and we push, we're going to get the move back to the 20, potentially the VWAP. Well, I got in and we sold off, and I got kind of mad because this thing just turned around and popped back up. Here is where you see a market maker or somebody, you know, when you see these come out of nowhere, if this was going to get bought up, it would have got bought up good here. You know, it wouldn't have had another hard sell-off and then get bought up in one big candle. This was somebody else. Now, I don't know. They didn't have rhythm, so, you know, it looks out of beat. Looks out of tune, doesn't it? But then we turned around and came back. I was almost out. You know, this person almost did their job. So I was almost out of this stock. And then got back in. I mean, I didn't get back in. I just held on to it. And we sold off and we started to get that move. So I covered some here. Covered some here. We didn't quite get the 103.88. That was my final target. But I said, okay, I'll just hold on to it and see if we ever get back. We pushed up, pulled back, made a higher low here, pushed back up, made a higher high. And then as we pushed back up over the 20, I had to take it off. Had to cover my last piece. And when we started to pull back and sell off below the 20, I got in, but we put in another higher low. I ended up taking it off here. And you can see, drawing this trend line where we were putting in higher lows, it was gearing up to break this. And if you look at the chart now, I quit trading. You know, once I took this trade off, I was done. That's why I started, you know, taking snapshots of my chart. But you'll see that it went on up. It broke through and just kept going up. Went through VWAP. I think it went all the way up to the 100-day. I mean, strong, solid move up. But you can see we were making higher lows. Clear sign to get out. So really, really, really worked OLED. I was really happy with OLED. I wish we would have gotten a late day fade here. I wish it would have set up for one. But it didn't. It just kept going up. So really happy with what I did on it. And this is all about being in tune and being in rhythm. You know, had to take a couple of sachets here. And then we finally got to doing some good square line dancing here. This is just a closer shot of what I was talking about. You know, how the stock was making higher lows. That's all this is. I blew it up so in case it didn't come out good on the other one, you could see it. How closely, you know, this thing held. We were just gearing up, got tighter, and it blew off the top. All right, so Facebook was one. I kind of had the rhythm too. It was just like OLED, but I gave up on this because OLED broke before this one did. It broke right around in here. This one didn't break until we got here. By then, my focus was just on one stock. And if I had to do this again, I would do it again tomorrow. Because if you have two stocks that are, you know, kind of bouncing and trading a little jumpy, you got to pick one. It's hard enough to trade two stocks when the trades are working. But when you're getting bouncing and price action like this, it makes it even more difficult. But I did get one move down, got stopped out, got in. Got in one move, got in, got stopped out, got in, took profit here, and got stopped out here. Did not get back in this. Again, because I went to focus on the other trade. So I missed this huge move. And of course, later on in the day, what are you going to get? If you miss a big move and you still have this up, you know you're going to get into some revenge trading and fear. That pretty much revenge trading is what it was. No reason for me to be doing this. I am smarter than this. But what happened was I got so happy, I pulled up my P&L, took a picture of it, of both of them, and tweeted them out. So then I knew exactly where I was. And here I'm trying to just make money. I'm like, I'm going to, And so ended up shorting this, getting stopped out here. Tried to short it again, got stopped out again. And then I went long, covered here, and then got short and just took it off because I was just being stupid. I realized I was just being dumb and I need to quit. And that's what I did. So that was it. Didn't really do much on Facebook. I could have made the same money on Facebook that I did on OLED had I been able to keep in rhythm. But like I said, it's really difficult with one stock. Trying to do two, it would have taken some luck. And, that's exactly what would have been. And here's the 100-day that was my ultimate target here. And this actually fell through and gave us another 1.5, almost 2 points before we got the bounce. So both of these stocks on our watch list really paid. Doesn't matter which one you picked. You got paid today. If you stuck with it. And this is exactly what I try to teach. If you aren't in sync with it and you can't give it your 100% attention, you got to stop. Stick with the ones that you're in sync with. I was in sync with OLED and worked it out. But if I only had Facebook to work with, I would have stayed engaged in this and got back in. I would have traded this down. So it's all about focusing, narrowing your focus, believing in your strategy, believing that the stock's going down. What you saw on the daily chart. It's below the VWAPs, below all of the moving averages. Then, you short the stock, son. That's all I had to do. That's all I had to tell myself. All right, so SCG. This is a strategy that I'm going to start out teaching in the swing trade class next, when it starts up next quarter. The new swing class starts, what's that, April 2nd, the start of the second quarter, or that week. And this is the first strategy because a lot of new traders that are going into swing trading find it hard to hold stocks overnight. They find it even harder to not micromanage stocks on a longer time frame. So these all-day holds I'm managing on a 60-minute chart. So as long as the 60-minute chart is working, it's in play, you stay in it. Now here, I was late getting out because I wasn't here. I was picking up my son. And I just decided to leave my computer home today. I wasn't going to watch it. And this is one of the times where I should have kept my computer, because I could have saved some profit on this. But this is a beautiful all-day hold. And this was on the catalyst that, yesterday in the local newspaper, all of the stuff that they tried to do was coming out. I mean, this is some bad stuff that SCG was doing to their customers. They're going to have to pay this money back. I don't care who they merge with. Whoever they're merging with, that BS agreement they're trying to push through isn't going to work. Our legislature has already said no way. That's not going to happen. And so this had been running up with the with the sector over the last couple of weeks. But I'm still holding this short in my long term. I'm still negative in it, but I do feel it's continuing to come back down. I mean, I'm waiting for this thing to go bankrupt. I got a feeling before this summer they're going to declare bankruptcy. That's exactly what I'm looking for. So, but it offered a great all-day hold based on the catalyst, and we took it and we manage it with the hourly chart. We don't look at the 5-minute ups and downs, because if we do, we're going to stop out. If you want to watch this, watch it on an hourly chart. For me, I just set my targets, and walk away from it. You know, I don't even look at it. And we're making money not even looking at it. I barely looked at this stock today, and you know, made almost $1,000 on it. Really should have made excuse me, really should have made $1,400 on it had I been here to stop out when I should have, going into the close. But you know, just a slow trend following meticulous trade, and no stress. You know, maybe a little bit if you're fighting yourself to not to look at this, but this is what I like to do. And so this is what we're going to teach first, so that we can get acclimated to holding all day. And this is a strategy that I use to get acclimated to swing trading. I forgot what's that guy's name. He was part of the trader summit that I was a part of a couple of years ago, and he teaches this I think it's a PS60 strategy. His is a lot more complicated. You know me, I just take the most integral parts out, put it together, and make it work. And that's what I did on this. But it's really what helped me get into swing trading. TIF, this is a carryover from last week on Friday. I couldn't get in my account when I got to the hotel. I couldn't get in, and I couldn't see. But this piece didn't stop out when it was supposed to. We ended up getting a real nice gap down this morning. This is where I got in on Friday. I'd already got in this one time, stopped out, got back in, and was up like $35 on it. And then, you know, here's the 60-minute chart. This is what we're trading off of. We got a 60-minute candle to reject here. Get in on this one, and just manage it. Get one candle to make a higher low. Here, this is where we took off our first target. Right here. And, you know, as we pushed up, I went ahead and took the rest off. You can see we were trying to make higher lows. You know, this was looking bullish to me. And I didn't want to take it off, but I did. I had that nervous click, and you know, I was sitting there trying to decide whether to take it off. That nervous click made the decision for me, and it was right. But I was sitting here watching this saying, this is bullish, I probably need to take it off. And subconsciously my mind said, yeah, take it off. But here's another one that could have been this could have been a nice trade on the 60-minute chart. This was last week, and I just reaped the benefits of it today. But solid day all the way around. 26.83.55 in a swing account, and then 21.28.67 in our day trading account. So both of them today we made 48.12.22, and this is money that every month, this is what I pay myself out of. I take the profits out, I send them to the appropriate accounts, and we start over the next week, the next month. But the moral of the story is I was in the right place because my training put me in the right place. I was able to make these trades because I was able to get in rhythm and trade with the rhythm of the market. And that's what this is all about. I know other people have different ways of doing it. They trade momentum, they trade this, that, and that's not wrong. There are just other ways to trade and to make money. This just happens to be the way I choose to. So that does it for me. I hope you guys got something out of this. I know it was long, but had a lot to say. This was a pretty interesting day, to say the least. So we'll get back at it. We'll reload, see if we can take down some more hogs in the morning. So have a great night, a great evening, and I'll see you first thing in the morning.